Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a series that aims to focus on the trend lines rather than just the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hi, this is Kevin Roskam at USA Financial with your October Trending Report. The year continues to pass us by, and as the year goes, we look forward to, again, getting closer to an election. The election always stirs emotions. It always causes us to think, what should we do now? Should we be making changes in our portfolio? Should we be overriding the actions of our money managers? Should we be overly cautious or overly optimistic? It's one of the most important things we think about every 4 years. And it's one of the things that we always address when we think about trending. Remember that market trending is really meant to help us overcome and manage our emotions throughout the market cycle. And so when we talk about market trending, we're talking about unemotional investing. We're talking about staying disciplined. We're talking about trying to control the noise that we hear around us and not let it affect our long-term portfolio. And so what I want to talk about for this month and the trending report is, what do the trends look like? And based on where the trends have been, what should we do going forward? Now, the month of October for the Midwest and, of course, the Northeast is a beautiful time of the year because the leaves start to change color. Typically, because it gets colder, because it gets drier, we start to see this change of season. And the thing about the colors is that no tree changes at the exact same time as the others. If everything turned from green to orange or from green to red at the same exact time, it wouldn't be the same. Fall wouldn't be as beautiful as it can be if you live in the right parts of the country. And so what we know about the fall is we know that a trend is taking place. We know that we're going to, as this trend carries out, we're going to end up seeing trees without leaves on them. But we don't know which leaves will fall first. Now, I'm sure there's some tree people out there that can tell me that the maples will do this before the oaks do that, and the elms and all of this stuff. That's not what I mean. What I mean is that as I drive down these tree-covered streets, each tree will have their leaves fall differently. And depending on how the wind blows, depending on what kind of rainstorms we have, each tree has a different time frame. But we know that the trend is towards winter, and the trend is towards those leaves, all of them, losing their leaves. It's the same thing in the stock market in terms of trending. We know that stocks go up and down. When we talk about the stock market, we're typically talking about the stocks inside of the market, the 500 individual equities inside of the S&P 500. And even though we look at the trend of the overall market, we know that inside of that market, each individual equity moves at its own speed, at its own pace, and they each have their own momentum, and they each rise and fall at different speeds. Now, some will rise and fall together, and we know that as the market turns in cycles, most of the time, the stocks all follow that cycle, but they don't do it all at the same time. It's so important to remember that even though we look at an overall trend, that the individual equities inside of the market don't march in lockstep. I tell you that because as we look towards this first week of November and we start to pay attention to what we hear on the news and what we see in front of our computers, it's important that we don't allow our emotions to decide how our portfolio should act when we don't know how the market's going to act. These are those times when it's important for us to remember why. Why are we invested the way we are? Why do we use unemotional money managers? Why do we have accounts that are set up for the long term versus set up for the short term, that are set up to take risk versus set up for safety? It's also important to remember when. When are our investments being looked at? When are things being reevaluated? When can changes occur? Now, if you're like most of our USA Financial clients, you employ money managers that work on different time frames. They're all looking to trend the market, but some of them do it on a daily basis. Is today the day we're in or out? Some do it on a weekly basis. Some will do it quarterly or monthly. Some only do it once a year. And just like the trees in fall, we know that when you're using a trending manager, all of those managers could end up in a safe position away from market volatility. But they typically don't all do it at the same time. And so as your emotions start to get caught up in this election season, it's important to remember and not allow them to get mixed up with your investment strategy. And so let's look at the trends. Just like we do every month, the first thing I want to show you is the trend since September 1st. Over the last month and a half or so, we can see near that beginning of September, we had a bit of a dip in the marketplace, in the stock market. And the S&P since September 1st has been moving in the right direction. Even as almost with lower volatility than we might expect. Now, of course, that volatility can change, but the trend over the last 45 days or so has been positive. Well, what about the trend since the beginning of the year? Again, just like last month, the overall trend now of the last 10 and a half months has been positive. It has been a very positive year in the stock market. Yes, you can see volatility. Some of that in April, obviously some of that in August, even a little bit in September. But even through that short-term volatility, we have seen the overall trend go positive. And so it's just a reminder that when we talk typically about our investments, the stuff that is exposed to the stock market, we're concerned about the long term. And so again, bringing out that yearly volatility to a 5-year period since September of 2019. Over the past 5 years, we continue to see an overall positive trend. Now, as you can see, the market doesn't move in a straight line. It does resemble a mountainside more than it does a hillside because there's volatility. That's why it's so important to employ these money managers that work on an unemotional, disciplined schedule. And if you have the ability, it's why it's so nice to have the ability to combine these managers that work on different time frames, that measure different periods of time to manage risk in a trending way that's disciplined. You know, for me, election season by now, even though we're still 3 weeks away, is exhausting. The television ads, the stuff in my mailbox, what's true, what's false, what's exaggerated, what does the future hold, who's going to do this, who's going to do that, it all starts to build. And sometimes what it will do is it will cause an overreaction. Now, the nice thing for me is my television has a mute button. And so I can mute out the noise from the different commercials during the baseball games and the football games. And for me, muting out that noise helps. It's no different with the stock market. If you're watching television during the day, if you've got your TV tuned to the different financial shows, and every day they're telling you what a certain candidate's presidency could mean versus the other candidate's presidency could mean, and how it could affect the stock market, and what we should be looking at over the next 3 weeks, hit the mute button. Because remember, when you're talking about your money with USA Financial, you're talking about long-term money. And you've employed unemotional money managers that use a disciplined approach to look at the trends in the marketplace. And if you just allow those money managers to work, they're not all going to get defensive at the same time. The trees don't all lose their leaves at the same time. These money managers will not all get out of the market at the exact right time. They won't all come back into the market at the exact right time. But the reason we employ unemotional, disciplined, trending money managers is to give us the chance to keep our emotions in check and to allow them to manage our assets for long-term success. And so in the middle of October, the trends are positive. The future is exciting. I can't wait to talk to you again next month. This is Kevin Roskam with USA Financial, and this has been your October Trending Report.
Thanks again for listening to this episode of the Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.